Good morning, everybody. Today is February 5th, 2020, and here's your stock market report for today. I actually was able to make some money, about 30% profit within an hour of the stock market being opened, and the reason is that we have Dow Jones jumping 300 points. I'm trading DIA, which is ETF that basically matches Dow Jones index, and this morning I saw it jumped from like 287 to 291 almost. And there's a good saying on the market that says that trees don't grow to the sky. What that means is that there are jumps on the stock market that are frankly not sustainable. What that means is that if the market was jumping like this every single day, we would have a return of 10,000% a year. But as we all know, Dow Jones or S&P 500 are considered to have a great year, like last year when they jumped 30%. So which means that when you have a big jump of like 1 or 2% for the whole market, usually you would have a rollback of those changes, meaning that the market will decline, because the simple math just tells you if the stock market jumped 2% and we have 200 trading days per year, if you multiply 200 by 2, we're talking about 400% gain, which basically never ever happened. This obviously tells us that when you have a market that jumps 600 points one day, then it jumps 300 points another day, and before that it jumped another 100 points. Basically, when the market gains 1,000 points, I'm talking about Dow Jones, if it gains 1,000 points in 3 days, most likely you will have a decline. And the reason for this is that the market is really driven by two things. They are greed and fear. When the stock market declines, like we had a drop of 600 points because of coronavirus, obviously the market became cheap. And even though we had a scare of that virus and we had a big sell-off, the more prices decline, the more greedy people become, because they look at it and they see that they could buy something a lot cheaper than, let's say, yesterday or a couple of days ago, and obviously that pushes them to place some buy orders. And this is why the stock market doesn't crash all the way to zero, because greed steps in and it overshadows the fear of people that are dumping their stocks because they're afraid that, oh, this is the end of the world, I better get out. And the massive selling is driving stock prices down. So you should use that as your opportunity to capitalize on such fears and greed. So case in point, this morning I bought a $290 put on DIA ETF. when I was placing the order, it was trading at around $1.25 per share. However, per share for the option. So I put a buy order at $1. And guess what? Within 5 or 10 minutes, my order was actually executed because, you know, there were some fools that were pushing the market even higher by placing all kinds of buy orders, all excited that the Dow Jones already jumped, 200 or 300 points, and now it's going to jump even further. But they just don't know the probability theory, that if you already missed a 300 jump in one day, chances that this thing is going to go further up are a lot less than for this thing to actually go down in price. So as soon as my order for $290 put that expires, by the way, February 7th, or this Friday, as soon as it was executed, I immediately put an order to sell it at $1.30 or 30% gain. So I placed the order and I went to, with my things in the morning. I had to, brush my teeth, make some food, make some breakfast, and I don't even look at my monitor or I'm trading on a tablet. So, but I go to the first floor, I have my breakfast, I come back, and I see suddenly that my order was executed and I sold it at $1.30. So, if you would like to know what to do with the rest of 2,200 actively traded ETFs, go to the website foretf.com. It will take you directly to the Apple App Store, where you could download, install, and run this app on your iPhone, iPad, and Apple TV. Thank you for your time, and good luck trading.